I lost about six figures easily. I consider that as the expense paid to learn what I was doing.
Many options traders dream about being able to trade full time. But how can you best scale up your trading significantly if that is your goal? My guest worked 20 years in IT. Today, he manages his own options trading hedge fund. What are his tips? Welcome, Nash Reddy.
Hey, good morning, John. How are you doing? Good morning,
Just
viewers.
thank you. Nash, what is the number one thing you have learned about what it takes to significantly scale up your options trading?
It's the conviction and believing in yourself that you can do it. And once you have some kind of a consistency, then you can scale up.
Give us a snapshot of where you are today. You run a hedge fund.
Yes. So the hedge fund has been running for 2 years. We have done double-digit returns over the time. I manage my own fund. It took some time to take off, but once I had the conviction, once I raised the capital from the good friends, I was able to manage. I'm still managing their money. Yeah.
How did you get into trading in the first place?
So this is a funny story. In 2017, I was a long-term investor, meaning buy and hold kind of a guy. Never sold any stock that I bought. I got pretty good stocks for a long time. I held them for like 10 plus years. But in 2017, in one of the events, my good friend told me about options. And I was like, oh, what are these options? I went back and immediately opened the trading account and obviously, lost money. This was in 17, 18, mid 19. I lost money. I was just buying something in the assumption that it will go up or go down. And initially, I was only doing a buy side because I don't know what the downside looks like. And I lost money 17, 18, and mid 19. In mid nine, I lost about six figures easily. I consider that as the expense paid to learn what I was doing. This was like over the span of 2.5 years. Then I was thinking to myself, why am I always on the wrong side of the equation? Because I'm being in a math background. I was thinking, there has to be, why can't I be the other side of the equation? Why I'm on the always on the wrong side? That's when the sell side came into picture. One of the day on a Friday, I had 100 shares of Apple. By mistake, I sold a call. I didn't realize till the end of the session that I sold a call instead of buying a call. So what happened was the credit that I received, I had to keep it, and that's what fascinated me. Like oh, there is a sell side as well, because I always thought, just like everybody else, that you can only do selling. Only the institutions can do it, not the retail trader. But I was completely wrong. So that one mistake, a good mistake, changed the entire course of my life and career.
This is an amazing story, and this is just a few years back. And what made you make this leap from being a hobby trader to quit your job and even start your own fund?
As you can see, it is lucrative, it is fascinating, because the whole entire day revolves around the numbers and probabilities, what you're doing, finding new strategies, go back, apply them. It's just a fascination and a curiosity that got me into this. And once you started making money, there is no looking back.
Just give me a very brief explanation of what you do in this hedge fund.
It's an option selling business, primarily 0 days to expiration. The fund runs about eight different strategies, completely automated. Every entry will have a non negotiable stop loss. We have some hedges in place in case of any catastrophic events, just to protect the capital. So it's primarily option selling business.
And to scale your business, you need, of course, winning strategies. Otherwise, you are not profitable. What type of strategies do you typically trade today, and how did you develop them?
So over the course of the time, I have watched thousands of videos of YouTube content, and I learned what to do, and more importantly, what not to do. When I say what not to do, right, I mean, uh, in 2019, when I was making money with one strategy, like a typical put selling, you sell a put 90 days out, then at 45 days or so, you will start either profit or loss or roll into different things. I was doing put selling, primarily put selling, nothing else, but I was making money. At the same time, I was also doing, buying calls on the other side. which is a mistake. I mean, because I have a strong believer now that buying cannot make money in the longer term. I started with put selling, then slowly ventured into the selling call side, then the strangles, straddles, iron flies, iron condors, ratio spreads, broken wing butterflies. I've done every single strategy that is available there, and I have clear picture of what should be the profit target, what should be the loss target on each of these things. But again, we don't do all of these things because some of them are not capital efficient. Some of them are, even though they are profitable, but they're not capital efficient. So I came back to conclusion that some of these 8 strategies are working fine now. I need additional capital to deploy more strategies.
Can you somehow group these 8 strategies you're doing?
Yes. So there are trend based. One of them is exclusively trend based, meaning the assumption is if the market is trending upwards, the strategy assumes that it's going to go continuously upwards, and we take the trades on the other side. Then the EMA based entries, moving average based entries. Then we do iron condos at a certain level. Then I also do iron flies, depending on where the market is, how it is trending, and 1 days to expiration, little bit of exposure just to get some theta out of it.
What would be your best advice to a beginner trader for how to develop a profitable strategy and also stick to it?
Yeah, so there is a famous Bruce Lee quote: I fear a man who does one cake 10,000 times as opposed to 10,000 cakes in one time. So, what does it mean, right? You do one strategy, you understand all the nuances of it. It can be a put selling, it can be a broken wing butterfly, it can be an iron condor, it can be an iron fly, anything. Because, when you look back in the industry, every strategy there is an expert in the field. For a broken wing butterfly, somebody is there. Iron condos, there is somebody is there. Iron flies, somebody is there. So my suggestion to a new trader who are upcoming, if you want to take the trading as your career, you have to be extremely serious and focus on one strategy and understand all the nuances of it. Like, let's say for put selling, right? How many days of expiration you are going to go for? Is it 90? Is it 45? Is it 7 days? Is it 1 day? Is it 0 days? Why are you doing these things? What are the Greeks telling you? You have to focus on them, and you have to track to make sure what delta you're selling, how much theta you're getting, what should be the stop loss, why are you taking the loss. You go back and you have to analyze this trade. I did that for like 2 3 years. I had all the sheets maintained to make sure. Then I came to conclusion that instead of doing 90 days, if I do 45 days and if I get this much credit at having a this much stop loss will make a lot of sense. It's all about, don't marry to one trade, because a lot of times you will say your conviction will say, oh, market is moved like 10% down already, it's not going to go more down, and you will keep selling, you'll keep adding on to the existing
Mm.
positions. I will not suggest to any of those things. And keep your risk in control, meaning every trade should have some kind of a risk in place, and the overall risk per day has to be measured and controlled. And I strongly believe, this was my mentor who suggested me when I started trading, when I started hedge fund. He clearly mentioned that think of 2% per day loss as a your risk goal. You cannot have more than 2% loss in a day, because what would happen is the losses, once you start taking big losses, the recouping comes extremely difficult.
Mm. Do you have any rules for when you scale a strategy? I assume that you, as most traders, are starting pretty small with a new strategy.
Yeah, the first things first, all these rules only apply for the selling side. My suggestion is you have to have minimum like a 30 grand or so, because you want to avoid the PDT rule, the
Mm.
patent day trading rule, where they will only limit 3 trades per week. So start with 30 grand and stick to one strategy, probably the put selling, and don't go for individual tickers. It is suggested that you do this on a SPY. The SPX will not justify doing it on a 30,000. So do it on a SPY and honor your losses. Definitely honor your profits. It's easy to take profits, but once you're in a loss, people tend
Mm.
to add on to it or try to do something else. But what I say to most of my traders is, you have to have decision of what is the profit target and what is the stop loss even before you enter into the trade, not after trading the trade, and definitely not when the trade is in progress.
Let's move to risk management, which is a very important part of trading. You are an experienced poker player. Has that helped you manage risk in options?
Oh, yes, definitely. I mean, all my investors are my poker friends, and I'm very thankful to them for trusting my instincts and what I'm doing today. See, the way the poker is played is, at certain situations, you have to be extremely aggressive. And at certain situations, you just have to fold. Even, I say this to many times to all my poker friends. In a no limit hand, if you can fold a pocket queens free flop based on the action that happened, that's when I believe that you are a strong poker player. But many people will not do it, meaning pocket queens in a poker world is extremely strong hand. But if there is already action happened, like a raise, re-raise, and followed by another re-raise, depending on how the players are doing, which player is doing, if you can fold pocket queens pre-flop, that's when I think that you have mastered the poker.
Well, I don't know anything about poker myself, but maybe I should start playing it as part of my trading. Who knows?
Yeah, I mean, that's why I gave the proper example. I'm sure the people who are watching this and have experience in poker, they'll understand what I said.
What are your main rules for risk management? Is it possible to summarize those?
Sure. So basically, let's say you are doing some kind of a moving average entries, right? I try to split up throughout the day, like from starting from 10 Eastern to 3 p.m. Eastern. How many hours are there? How many times you want to get into the trade? Let's say you're doing 6 entries for like in the 6 hours or so. I'm just giving you a random example. So you will have to limit how many wins are needed to make even for how many losses. You cannot have like one loss cannot take five successful trades. So you have to adjust your stop such a way that like one is to either 1:1 or 1:2 or 1:3, meaning one successful trade is okay to have two losses or three losses depending on how you are doing it. You could have more losses, which is okay. But again, this is not about one trading session. It is not about one trading day. It is about a longer term. So you have to go for that. Look for your win ratio, look for your loss ratio, and structure your trades accordingly.
Let's move to the psychological part of this, especially how it relates to how you can scale your activities. What are some of the biggest psychological pressures that traders typically face, and how do you personally manage them?
Yeah, they're extremely difficult. My suggestion to an upcoming trader who wants to become like a full time later in their life, I'm suggesting them to start looking at the percentages, not at the numbers. So, for example, like let's say you start with a $30,000 account, you lost 10%, right? You think of it like a percentages basis, not on the dollar amount, right? So because for like when I started, I was always looking at the numbers, meaning how much is my net link, how much money was I made, how much loss I took it. So what happened was when the account grew significantly, when I had 100,000 and had a loss of 18,000 versus having $1 million, having a loss of 18,000, they're completely two different pictures. Because an account with 1 million can easily tackle 18,000 loss. It's not a big deal, you can catch up. But a 100,000 account, you're almost losing like 20%, right? I mean 18,000 loss. So I always tell the traders, look your numbers in terms of percentages, not by the dollar figures. Because what happened to me was psychologically I was stuck at this number because the 18,000, the reason why I'm mentioning is that was the biggest loss that I took in a single day in my personal accounts. I mean, obviously now I take like a lot bigger losses, dollar figures, but not in the percentages base. So you will face some kind of a psychological reasons along the way. That's why if you start looking at the numbers in a percentages basis, you will not face this issue.
When you lost 18,000, what did that do to you?
Psychologically you will be down for sure because that will hurt you, right? Because you expected something, market did something else. I mean, which is typical. But again, having good friends, family, and you having a different career, meaning a different hobby other than trading at the end of the day, that will also help you. I play poker every single day, almost like an hour, 2 hours minimum. That will help me actually to forget how the day went in the morning. So it is very, I feel privileged and honored that I'm able to play with my friends within the groups. I don't play poker to make money, just so that it's a deviation, complete deviation. You could do some kind of a gardening which is completely out of your trading. You have to deviate from what happened in the morning because the next session is fresh, the next targets are fresh, next events are fresh. What market did yesterday may not happen today. It can be worse than that. So psychologically, you have to motivate yourself when you see these things and come back fresh next day.
I trade options, but I only trade with my own money. So when I lose, it's just hitting me. But you are trading with other people's money. Uh,
Right.
what difference does this make in the psychology part?
See, I'll give one example. Maybe it looks funny, but I'm sure one or two friends who played poker with me, they will correlate this. This was back in the day, like 5, 7 years ago. What my mentor in poker told me was, let's say you make a bad decision. You had a top pair kind of a hand, and the other guy is aggressively betting. You were unable to make a guess. He had nothing, or had a top set, or he had a strong hand, for example. And without realizing, you made a huge mistake and lost your entire stack. Let's say whatever that number is, like $1,000 or $2,000. What I used to do was, I used to make a note of how many mistakes that I did in the poker session, and depending on those number of mistakes, I used to break myself that many weeks not playing poker. What this will do is, because of your own mistakes, you lost money in poker. That means you cannot play for next to 2 weeks. Let's say you made two times these kinds of mistakes. This way, what will happen is, you will become sensitive, you'll become logical, and you'll become mechanical. You will realize that if you don't make a good decision now, that means you are not going to play poker for 1 or 2 weeks. So the same thing applies for in trading also. If knowingly, if the position is losing, let's say 2% of the account, you should not hold it. No matter what, you have to get out of the position, because you have to punish yourself for making mistakes. So I apply the same rules in trading as well. But again, initially when I was managing with my own money, I made some of the mistakes, like not closing a trade, not closing a position early, and that costed a bigger dollar amount losses, which I don't do it anymore. And 100% of the trading is automated for me. So I just watch to make sure that the entries are going fine, the exits are going fine. If a broker is filling these orders fine.
And I guess as a hedge fund manager, you are a bit lucky because you have poker players as your customers, and they do understand a bit about the risks and probabilities, etc.
Yeah, I'm, the hope my friends, they should be part of this video to tell me why they have invested in this fund, or is it in the fund, or is it in the person, right? I played poker for like 15, 20 years now, almost, since I came to US. Each session, everybody is monitoring how this guy is performing, how this guy is doing, right? It's not about making money, but psychological aspect, right? you know how is he tackling the losses, how is he tackling the wins, and everything that defines a person. So I think my 70% of investors are from my poker friends, and whom I know for like 15 years or so, easily.
You started, as most of us, with this as a hobby. The first years, as for many of us, you lost money. Then you started making some money, and at some stage, you decided you would go full time, quit your job, go full time, and even start your own firm. Can you explain some of the practical steps you took to move from being a hobby trader to be a full trader and managing your fund?
Sure. So when I was a hobby trader, right, I was just looking to make, like, this dinner money, this class money for kids, this and that, right? Like a small amount. But once I know that I was consistently making money, then I scaled up for like 2, 3 years just to see whether it is sustainable. And when you scale up, psychologically, I was ready, but market was not helpful. It was, I had like continuous 20 days loss, but I still did not lose hope, because this is all numbers and probability game. And once I know the numbers were coming, and once I know the P&L was coming up, I managed to see, like 2 years worth of my own data, how much money I was making, how much percentage return I'm doing. I felt that you have to have some kind of a track record. Just because you have some strategies, it doesn't mean that you can be successful. This is again, my mentor told me, two people having the exact same strategy, exact same stop loss, exact same time entries, but both will perform completely differently. It's because of the psychology side. As Mark Douglas says, I'm sure you heard many of the videos, right? I mean, trading is completely psychology. It is not about how much you are winning. How you're tackling your losses will define you, whether you'll be successful in the long run or like the failure. You will fall many times. You have to have the courage to get up and continue to do the sessions again and again. So I had the 2 years worth of data, my own data, and I was successful. I was making money. Then I felt taking a leap of faith was necessary, and I took it.
How can a retail or a hobby trader know when you're ready to increase your position sizes based on your
So
experience?
yeah, I mean, it as I said, right? I mean, look for the percentages as opposed to the
Mm.
dollar figures. So once you are able to manage your daily swings in a close fashion, like a 1 to 2% up and down, not more than that, right? If your account continuously increases, then you have to have some kind of a preset dollar amount that you have to keep it aside and think that once I make this kind of money, I'm going to increase one more contract, right? And once it does, you just increase that contract size and keep
Mhm.
doing it, right? And I believe in a slow path as opposed to making quickly, because if you try to go quickly, you can fall down quickly as well.
You mentioned a couple of times your mentor. How important is it to find a mentor? And how did the mentors help you scale your trading?
It is very necessary to have a mentor who is in your same trading as you, who understands what you're facing through, preferably somebody who is already experienced enough. So I had two mentors. One person is from Dubai, the other guy is from Australia. Both are veterans in trading. They just help me with the psychology side, what to do, what not to do, how you have to tackle the losses and wins, what should be the win ratio, what should be the loss ratio, just to talk it over. Because as you know, John, the trading is a completely lonely business, right? I mean, there is nobody's patting you for doing a good job, nobody's scolding you, or nobody's saying anything if you did an extremely bad job, right? It is a discipline that comes into picture. So having a mentor and talking to them like frequently, like a weekly, at least like a twice a month or something, explaining what you have faced in the last sessions, it will help you. Right, having a mentor is absolutely necessary. They'll help you, and they will cut short your learning curve.
Are you still using a mentor?
I still talk to them. See, these mentors are, I'm not paying them. They're just like, they happen to be friends. I met them through a lot of these social media channels. Unfortunately, they recognized some kind of a talent in me and they became good friends to me. And over the time, we talk time to time. And I tell them very openly that, I'm considering you guys as my mentors. So I talk to them often.
Nash, we have covered a lot of ground in this interview. Could you sum up in actionable tips for a hobby trader who wants to scale up his trading and maybe even make a living from it based on your experience?
So what I say is, always monitor your numbers, and tracking your numbers date by date will help you. Meaning, a lot of people will say, "Oh, the tracking takes a lot of time," but the tracking helps you. You have to monitor your trades. Go back to charts and see when you took a loss, why you took a loss, and what is happening in the currently. What is your maximum loss? Control. Why did you miss your stop loss? You have to monitor those things. Once your account starts growing slowly, focus on growing the account slowly. Once it reaches certain numbers, start adding the extra contracts. Just because your account allows you to do 50 contracts doesn't mean that you'll be able to scale up so easily. Meaning, let's say if you have a winning strategy, you are doing 5 lots, right? And you made money for like 2 months, for example, right? Suddenly you want to do 50 lots. The psychology side is completely different. It is not the same trading 5 lots versus 50 lots. A lot of people don't realize that. You have to scale up slowly, because you have to also train your brain to adjust the ups and downs. So because I've met few people in the social medias that, they spoke to me, they lost like 6 figures. Their consensus was, oh, I was doing five lots of this strategy, this was working fine, and suddenly increased to 50 and it's no longer working. Because the in the 5 lots your loss may be $600, but in a 50 lots it's like 6,000. It will hurt you mentally. So scale up slowly and mentally be ready. The swings are absolutely possible, and the lost days are inevitable. You will have lost days, but it is how you tackle those lost days will define you ultimately.
Nash, what are good sources to learn more, both about options trading and maybe also about how to scale your trading?
So YouTube is the best source. There are plenty of good channels that are available. I watched tasty live videos for a long time. I used to just keep them on while I was driving, going to work, coming back to work. I used to love those sessions. But again, you can learn a lot of stuff from tasty trade, but again, you have to scale up slowly. They talk about trading more often, more number of times, but over the times, those videos helps you. But again, you will have to come up with your own strategy. You have to focus on one strategy, because in the industry, there are experts in each of the strategies, like a broken wing butterfly, iron flies, iron condos, straddle, strangle. There are experts who will do only one strategy. So as a new trader, you please focus on one strategy first before venturing into everything else.
Would you have one or two good books about option trading to recommend?
So Mark Douglas book, The Psychology of Trading, that's a very good, and The Psychology of Money is a very good book. I go back to time just to hear some of his videos in YouTube. They are available on YouTube.
Of course, I would also recommend that you watch some of the other interviews we have done here on Theta Profits. We interview option traders every Sunday on different topics that are relevant for the beginner and the intermediate options trader. Nash, thank you very much for joining and sharing your experience. This was very exciting.
Thank you, John. Glad I could help, and good luck to everyone.